Well, Alphabet, Amazon, Facebook all hit new highs today. The NASDAQ hits an all-time high. Well, Alphabet, Amazon, Facebook all hit new highs today. The NASDAQ hits an all-time high. So is Netflix a harbinger or an opportunity? Lee Munson, president and CIO, Portfolio Wealth Advisors, is in the house.
I'm here.
Not in New Mexico. Help me out with Netflix. Been trying to figure it out all day. Buying opportunity?
Well, I mean, if you like overpriced stocks, I think this is the one to go. I mean, in last year, they've burned through almost $2 billion. And so when analysts start talking about their negative cash flow, it's not my type of stock, but I would be far more interested in this stock if it was down 12% and stayed down for some reason. But, you might have shorts covering, they're just throwing in the towel right now. If you want to buy a momentum stock, buy it now, because your big risk is going to be next quarter. Because if they disappoint again next quarter, this thing's toast. But if they pull it together, then I think as long as this sort of tech fang rally goes, so will Netflix. I mean, it's part of the group. And so I don't think you're going to decouple that. But remember, this eventually is going to look like Tower Records, 1998. Eventually, we're going to find that just because we're America and everybody loves American entertainment, what are they going to do? Take on Bollywood? There's only so much of our culture that's going to be exported. And I think as Americans, we think that anything we do here, every place around the world wants to see that stuff. But they want to see stuff of people that look like them, too.
So you don't believe the international growth story is a robust one?
Well, I think it's going to last for a little while, but I think that's where you're going to see profits get squeezed. I think that that's where the culture, if Netflix is going to really crack up, that's what's going to kill it, is the international component. It's, you look at things like Coca-Cola from 20 years ago, where everybody needs to buy a Coke.
Right.
Okay, people in France don't all want to drink Coca-Cola. They drink their little sparkly water, right? And so I think that Netflix is going to have to really prove to investors long-term that it can be profitable. Right? This is a media company. This isn't just Amazon where they're just going to keep gobbling places here. They do one thing. They sell content, and that's it. And so I think that if you want to ride a momentum play, get in now, right?
And wait till the next quarter.
And wait till the next quarter, because I think this is where you have your big risk return opportunity. Do I want to do that? No, I want to buy stocks that have earnings and make money, and I can see growth. Right? I don't like companies that just burn through cash like this.
So do you feel the same way about, this stock's hitting highs today, Amazon, Facebook, Google? Do you feel the same way about all of them?
Well, I think they're all overpriced to some extent. I mean, you look at Amazon, you have to look at the law of large numbers, okay? If you look at AT&T in the mid-'70s, they were very cocky. They didn't think there was going to be any regulatory problem with Ma Bell. If you look at Standard Oil, it was fine until 1911 when they just, remember what was happening in 1911 with Standard Oil. We had a populist government, we had populist sentiment, and these people, these Standard Oil people thought that they had some divine providence, that they had found dilithium crystals, on the moon. And it was just, they found this thing, and so they should just print as much money as they want. I think when you're looking at these type of companies, you have to distinguish between Amazon, which basically is just going and destroying capital. I kind of like that, right? Jeff Bezos
the disruption.
The disruption thing, and he's always has this new market to disrupt. It's almost like an endless market to disrupt. With Facebook, they have one market that they disrupted, which is ad sales. Google had one market they're disrupting, which is ad sales. And so that's kind of that sort of subtle difference. If I had to hold a stock for the next 20 years, right, I'd rather just hold Amazon, right? Just like I'd rather hold, 20 years ago, hold some Walmart, right? But I think when you're looking at Facebook, how much growth are we, how much are we going to spend on ads before it gets too big? And also, there's going to come a time, especially in a populous environment that we have globally, these things will get broken up.
So regulation is a headwind.
It is, and that doesn't, and again, if you want to do momentum plays, this is your chance.
Do you think we're in a tech bubble?
I do think we're in a tech bubble.
Like the early part of the tech bubble, or like the popping part of the tech bubble?
No, I think this is, I think we're beyond 1998 now. I think we're sort of in the 1999 phase where nobody's going to bet against FANG stocks. We've got the international component with the BAT. We've got these. The acronyms are getting longer and longer. I have clients.
So it's just going to be the whole alphabet.
Right, it's just going to be the whole alphabet. So I believe that we've become very complacent versus being kind of concerned about that. We're asking ourselves, if you have to ask yourself, you're in the bubble, right? The problem is that just because you can identify the bubble doesn't mean it's not going to go higher. The question is where are those valuations going to come down and how much damage is going to be done going forward. Because again, when you start looking at it, I mean, if Amazon stays on this course, it's going to be bigger than the East India Trading Company. I mean, it's going to be the biggest thing.
It'll be in everything.
It'll be in everything. And I don't think that's going to happen with this type of populism going on in the world.
Last time we had you were talking about banks. And that was like the only thing that we needed to be watching, the most important thing.
It's the most important thing
So
ever,
it's really
everybody.
great timing to have you back because we got a lot of bank news.
I know.
Got the start of earnings season. We got a new head of Goldman Sachs. How are you feeling about financials right now?
Well, I felt I was a better DJ than the Goldman Sachs guy, but that's.
Were you a DJ?
That's for the people. That's for the hipsters of Albuquerque to really decide, right?
We'd love a track. We'll play it. We'll play it during winners and losers.
But I think that banks still showed what. I mean, Goldman was a little soft, but they had a blowout quarter last quarter. They really surprised last quarter, so you can't expect this quarter to quarter, even at Goldman. I think that when you look at Bank of America, they increased their loan book. It wasn't as good as people wanted, but it was better than people expected last quarter. And then JP Morgan beat expectations on expanding their loan book, I think by like 4%. So I'm looking at, do we have expansion, right? Yes, we do. The loans are getting bigger. And this in a quarter where we had a so-called trade war, when we're supposed to have no consumer confidence. Everything's going to go down. Trump's tweeting, it's going to be awful. Nobody's going to do another loan because there's uncertainty. But yet all the major banks have good numbers, beat expectations for the most part, and all of them expanded their loan book. So it's hard for me to say, this is done. And even though I'm anti-momentum growth stuff, because I grew up in the dot-com days, I'm just not going to do that again. I would say that this still has legs on it.
Another place you were looking was emerging markets, but you wanted to go down more.
Yeah, a little bit.
Is it down enough now?
No, I said 20%, and we're down about 50. Yeah, we're about 15.
I thought it was between 10 and 20, so you wanted full 20.
Yeah, okay, yeah.
Need more.
If I have.
Look at the chart. There we go.
There we go.
You want more than that?
I've played around with that a little bit. If you move that chart a little bit, you can get 15% if you take from the high of late January. So we're about, that little point up there is about 15% from peak to trough.
Okay.
I really like that chart. If I have new cash, see, I have a problem with new cash. New cash is always coming in my coffers.
Yep.
So I'm pretty much buying my whole allocation. So right now, if somebody sent me $1, let's say $1 million.
Okay, let's say
more of what people send.
1 million.
I take the big dollars. So a client sent almost to me, I had to pay a little tax, sent almost $1 million. It's about $750,000. I want to invest right now. I think that we're in a sort of a summer downturn right now. I think the market could go lower. So I'm investing, say, about 25 to 50% of every dollar that comes to me today. But the emerging markets, I'm putting 100% of that allocation to work right now. So it just tells you where my sentiment is. So I say if you want to buy something right now and you want to buy it cheap, go for that. A lot of the downturn is just from the currency, and you can see that in international markets. In
the dollar.
Yeah, the dollar has swung up bad. I don't think that the fundamentals in China, minus the debt problem, or the fundamentals in Europe have really slowed down as much as people think. We have a sentiment problem because earlier this year at Davos, it was a love fest, and we said, global growth is synced. It's not unsynced, it's just that the dollar swung up. We've got this trade war noise. China does have a debt problem, which, you get all these managers buying Chinese bonds for some unknown reason. I mean, it's just madness in my opinion. But overall, I think that's where you can get a good deal right now. Because as far as the momentum stocks and the S&P, I think you got to wait for this thing to get a lot lower because those FANG stocks, they're really beefing up that valuation. And there are a lot of reasons why the S&P is going up. And that's a problem because I'm a kid from the 80s and 90s, and I remember how much the S&P was based on JDS Uniphase and Cisco and
Intel, Four Horsemen.
All that stuff. even the Microsofts and Coca-Colas. So I think you're going to have a lot of opportunity. But why not go into the emerging markets? I think the dollar's overdone right now.
We're going to keep an eye on that chart. We'll see when we get down 20%. We'll talk to you from New Mexico next time. And please send us some music, some tracks from your DJ.
Never.
Oh,
it's locked up with Prince's catalog, baby. It's right there.
We would love to get it. Lee Munson, who takes big dollars, thank you so much.